Welcome, and it's the Forex section. Here we're looking at the US dollar. Now, the US dollar and the euro in their internal intraday wave count is unclear. So we just need to tread a little bit carefully here. So with the US dollar here, we were looking at this particular market being up for one here, an A and a B and a C. I'm not even really happy with that, by the way, but it's sort of the best fitting count because we've got this 5-wave structure here. However, this is where we need to be careful because we do have 5 waves coming down through here. So this can be a rally back to the 61.8 retracement level, which is at 81 here, another supply level. So it could roll over from here. This move up through here, we were counting this as an impulse wave to the upside, but it just looks corrective. You know, it's that's 5-minute chart. That's not, where are we here? We just squashed this up. We'll just use this one. So just hang on, I'll find it. Okay, this is the chart that we were looking at yesterday and the previous day. So yeah, look, essentially, you know, this move up here was nice. That was like an impulse wave up here, and this corrective move across here, I understood that was corrective. And it's moved up, and really, as long as it stayed above the midpoint, the 80-50, it regarded as positive. So and we'll still do that, but I don't know, it's just this whole pattern now, you know, it just should have moved off much neater than this. And I mean, sure, this is up for one here, an A and a B and a C, and this is like a third wave here, but this one move down here really overlaps this one here. So if we get a move back down into here, overlapping this one here, then, you know, we've definitely got some sort of bearish structure. So just keep an eye on that. We'll stay on the long side with it, and so forth, and short on the euro, but the euro sort of bugs me as well. But anyway, look, it's above this level here, the 80-50. Next step is to get above the 80-72 area through here on this level here, and we'll continue to, and it'll keep creeping to the upside, and that's the same with the euro to the downside. But I've had a different count on here with the euro. Yesterday we were looking at a wave forward here because we've had 3 waves here, and it was kind of like a nice fit. But we understood that while the US dollar was above the 80-50, then you know, this market would be weaker. However, I can still move this. Look, this can be counted pretty much any way you want, really, in an ending diagonal triangle down for 1, back for 2, 3, 4, and 5. An A and a B and a C back to here, and then down from here as well. So look, it's all just a little bit sort of unclear. So you just need to be a little bit careful with it until this matter is clean, you know, is clearer at least. So yeah. Now, so the Australian dollar, what we were looking for yesterday, if you remember, we were looking for a rally up into the 61.8 retracement area to the 88 here, and that's panned out quite nicely. So if we do have an ABC here, an A wave, a B wave, and 5 waves for the C wave, then we've got another move up through here. So if I move to a lower time frame here, this is how I've counted it to the upside here. So the A wave, the B wave, 5 waves up for wave 1, back for wave 2, and then 1, 2, 3, 4, and 5 for here for the third, and the fourth pulling back to the fourth wave of 1 lesser degree. So as long as this stays intact here, then we should see a move up here, taking this high out here, and then that should complete it in this area through here, the group 1 area as such. So that 30 is important here. And the 10 and the 10 and 20 here, we can put those in here. This is all of group 1 here, and that should hold the market there. Yeah, if this ever becomes the, you know, the support here, in terms of it would pan out like this, that would give us 5. That would give us this. If we've got a corrective, because it normally come out in this range here. If we get something like this here, then, you know, and a break higher from that point, then we'll definitely be going up from that point. But as it stands at the moment, we are looking for a top. It is possible this could be a top, because this could just fold here and give us a nicer 5-wave structure to the downside, and then we would have 3 waves to the upside here, retesting somewhere up in the supply level here, and then rolling over from that point there. So look for that. Look for this move up through here. And if that's the case, then there'll be, well, it can just move straight down from here as well, and that's what we would expect. This, and you'd be taking this low out here to go lower through here after the retest back into here, and a breaking of this here. So there's a, you know, if it doesn't do that and it stays above the 72 and it develops this pattern, then we'll have to go that way with it. But as it stands, the Elliott is saying that we'll go down from here, or we'll go down from here. So either way, a little bit of patience to allow it to mature, and then look for a way in. Okay, the Euro Australian, we're looking, counting this 5-wave structure to the upside here, the 50 and the 61-point retracement levels here. We can see at the midpoint here, the midpoint's always 5, the number 5, is that we do have a nice support area through here, and would just naturally expect to bounce off the number 5 anyway, but here doubly so, because of something's already been, a bit of historical price action has been established there. So this move coming down through here, I mean, this could be the end of the correction through here, and we can be moving up through here, because the current move down through here is an ABC correction. But I think I'd like to allow it to a little bit more time to sort of complete. And this is the way I've got it counted. I've got an A wave, a B wave, and then 5 waves down. 1, 2, 3, 4, and then 1, 2, 3, 4, 5 down to here for wave 5 here. So if this does look rather like an impulse wave here, but if we have to first of all consider that it's just a bounce, and if it fails from this point and makes, I mean, if that's an impulse wave up there, then you'll see an A and a B and a C here. Then you would use that there and a breaking of that to go along from that point there, okay? But otherwise, it will just work lower through here and come down here. And if that's the case, then we'll be looking at a 5-wave sequence to the downside. So we put the 5 there, the 3 here, and the 4 here, the 1 over here. We can remove that, and the B wave here, and remove that as well. So I need to relabel this, but that's what we'd be looking for here. And then that would just be the A wave. So if I go back here, then it would look like this. So we would get another move down here. So that would give us 5 waves down through here. Because we got 5 here, then we'll get 3 back up, and then we'll get another 5 coming down here to this 61.8 retracement level, and then we can look at it moving in that direction from that point there. So basically we're looking, after an impulse wave, we're looking for an A and a B and a C pulling back to the 50-60% retracement level, and that's the pattern that we'll be looking for. But that pattern at the moment, this A, B, C here, can all be wrapped up in here as long as that low stays in. But we don't have a setup to go long here just yet either, so we need to wait for a session for that to pan out as well. So they're the 2 patterns or paths that it can take. The pound yen and the euro yen are kind of moving in the same sort of direction. Now, we've got, in this particular case, we've got a very clear A wave, B wave, and C wave here. So we would expect a move to go further up through there. Currently, the move up through here, it does look a bit corrective as well. It's reached the 50-60% retracement level here from this move down through here. And the thing with this so far, this move up through here, it counts as a 3-wave structure to the upside, an A, B, and C. And that A, B, C would be a 5-3-5 structure. So first of all, the circle is the 61.8, and that's the 50% there. So in the move up here so far, and I'm not saying it's corrective, I'm just saying that's what it is so far. So from this low here, we've got 1, 2, 3, 4, 5. So we knew that. So then what we said is that we'd be looking for an ABC across here, and then looking for support on the 170 to trade long. So you trade long to the next largest number. But in this particular case here, we've got the 1, 2, 3, 4, 5, but it's quite short, isn't it? It's probably 61.8% of the length of this one here. So it's kind of showing a situation where it's a little bit tired and a bit weak. So, but I wouldn't turn bearish until the 170 was broken and become a resistance here. So while it's above the closest largest number, we technically need to be on that side of it. So that's what we'll do. We'll stay long there, or cover your longs, whatever you like to do, and we'll just sort of see how it pans out. But as it stands, it's a corrective move up, but this looks corrective as well, and it could certainly move up further. It could certainly move up here further, and that's what we'd be sort of looking for. So we could say a move on the 170.72 and the 170.80, which would be a group 2 area in here. If that became the support, then we'll definitely be going up from that point there. But as it stands, we've got that corrective pattern here. Just also point out this as well. This is a nice little setup on this level here. Just the pattern, and you can take this pattern and use it for daily charts or 5 minutes or hourly, whatever. But the simple fact is that we've got the arrival here, the reaction, the first high above the level, the A, the B, and the C wave here in 5 waves, and then we've got up for 1 here, and we've got support here. So that's really, that's kind of the setup. That's good timing. So you trade to a level here, and then you wait for this pattern to unfold and get out here, because it's either going to be the classic trading levels pattern or the overshoot pattern, where it doesn't have a reaction here. It just goes straight up through there, and the distance above is normally the distance below, and then it does this sort of situation over here. So it's just really nice to understand that, because it really helps with your timing, and time is money, and getting out at some particular number and waiting for the setup. And if the setup comes, well, then you're in. If you're not, it doesn't. Like in this case here, you trade to this number, and it's got its arrival, its reaction, and well, it's still all sort of part of it here, really. But you trade to here, and you get out, and then you wait for the next setup over here. If it comes, terrific. If not, well, too bad. Anyway, sorry to rabbit on about that. Now, the pound yen here has got a reasonable trend up. When we look at the euro yen, it's actually weaker. So you can see here on just the 2-hour chart to start with, you can see that we've got this A, B, and C here. It's not really an impulse wave here as such. So even though I've got wave C or 4 here, that may not be the case. We may end up going down further, because we do have 5 waves here, and this here really appears to be corrective in here. So if we just drill in here for a moment. So this is the last count that we had a look at from the pound yen. We had a nice 5 waves up here, and the same here, and then we've got our corrective pattern through here, and then this move up through here is it's impulsive, but this move down through here is really making it more corrective. It's kind of starting to create overlapping wave structures here, so a sign of weakness. But we'll just stay with it. If this level here, whatever that is there, the 30 perhaps, yeah. So if that becomes breached, a clean breach of that level there, then you know that this is an A and a B and a C here, or it can be relabeled as this WXY, but whatever. But this 140 here as resistance would help with a setup to the lower side here. All right, well, that's it for the Forex. Cheers.